Hey, good morning, good afternoon, good evening, wherever you are in the world. This is Eric with Inspired Trading. Okay, today, guys, we're going to go through the Fibonacci retracement tool and the Fibonacci extension tool. So I'm trying to make this video as short as possible to go through this. So we're going to learn how to use TradingView to set up that particular tool. If you don't know what Fibonacci's is, you can go online and you can research to get more detail. But what we're going to do is we're going to learn how to use the tool. Okay, so if you want more deeper education on it, I advise you to do more research. All right, so these are the important levels that we're going to look at today. We're going to look at the 0.23, which is a 23%, the 0.38, 2, which is 38%, 0.5, 50%, 0.61, 8, which is 61%, and the 0.786, which is the 78%. All right, so each level represents some form of support and resistance. Remember, everything in trading basically comes down to market structure of support and resistance. Okay, we're going to also use the extension tool. The extension tool is going to help us give us our targets. All right, so that's going to be the 1.272 to 1.618. Okay, now let's go over to the chart. We're going to focus on a stock today, or oil, a commodity, and a forex pair, the US dollar, Japanese yen, and possibly a crypto. We may look at Tezos. Tezos does not have a lot of historical chart because it's a newer asset. So we'll see what we can do with that. Okay, so on this chart, we're on a daily chart. All right, and I'm going to focus on this level right here for demonstration, and this particular level. All right, but before we get started, I need you to go over here to your left on TradingView, and you got this icon right here. Scroll down, fib retracement. We're going to use that, and we got the trend-based extension. We're going to use that. Okay, so go ahead and click on the fib retracement. Find an area on your chart where you can pull it up. So I just scroll down and pull it up down here. All right, now let's look. We have so we have see that? Let me change this to red. All right, you got the 23%, 38%, 50%, 61%, 78%. All right, what this represents is these are zones and levels that price can pull back to as a retracement or a correction. So if an asset is moved down, then we can expect that it can at least come back to 23%, 38, 50, 61, 78, or even higher. But these are some key levels that help us. Remember, everything's about support and resistance. These lines serve as support and resistance. Okay, so got that out the way. Okay, we're going to pull that chart back up. I didn't mean to delete it. So we're going to pull that chart back up, or that tool back up. Okay, and I want you to go to set. We're going to go to settings on it. So okay, hover over it, right click it, and you see settings right here. Click on settings. All right, and this is what's going to come up. Style. All right, on your trend lines, which is these lines, you click on it. You can choose whatever color you want. All right, I chose this color. You can choose whatever color you want your lines to be. You can also do the thickness of the lines. Okay. Thickness right here for these lines. Okay. So if you like the thicker lines, you can choose that. You can choose your color. And let's scroll down. These are the important levels you want. Checkbox for the 0. Checkbox 382. Checkbox is 61. Checkbox is 23. Check the 0.5 to 50%. and check the 0.786. All of the other levels, uncheck them. You want to take all the other levels off. Check these boxes. You also can go ahead and check, if you want to, the 1.272 as well, and that's it. Change your background however you want. Check, they have the prices and the levels. Make sure those are checked. Make sure everything looks like this. And then you just go down there and you hit OK. Don't worry about coordinates. Don't worry about visibility at the time. All right, but go down and hit OK. All right, and then now your retracement tool should look similar to mine. All right, so now let's get started. In order to be effective with the Fibonacci, we must first identify a trend, preferably a bullish or bearish impulsive move. Impulsive means is strong. So you see over here, this is a strong impulsive move to the downside. And then what do we have? A correction. Okay. So what we're going to do is we're going to look, this is one, but we're going to look at this one because this is a downtrend. All right. Now, it's not as impulsive as this one, but it's still a downtrend, and it gives us the indication that price may want to retrace back. Clearly, you see that we have a downtrend, and then we have what? A nice uptrend over time to a recovery. The question is this trend over with? And that's what the extension tool could possibly help you dictate, and the retracements to help you dictate that. Because right here, someone could think, hey, I'm going up, I'm holding, I'm doing very good. I bought at the bottom, and then look at this over here. You're down. You just got ate up because you held. You didn't understand market structure. All right. So let's measure that. So we're gonna take the tool, and guys, you can drag this stuff over to your home, to a favorites, and then you can crunch it and have it on the chart. So that's why I got this here, so I don't have to keep coming back over here. For instance, I think you can, let me see, let me add another tool. So you got this, see this right here? Just hit favorite, add the favorites. Boom. See what happened? It's right here. All right. So I just added a tool. All right. So here's my fib retracement. All right. We're going to delete this one. Let's delete that. Delete that. Just move it. All right. Fib retracement. Start from here. We're going to drag it down to where it found support. And we can just stretch it on out. Okay. Remember, we talked about the zones. Got the 23, 38, 50, 61, and 78. All right. What did price do? Price moved back to the what? 23. All right. Went on up, moved to the 38, and went on up, moved to the 50. Eventually, we over here at the 61, and then now we're up here at the 78 and a little bit above. All right. So clearly, we see that what price found a way to come back. Some people use the Fibonacci to find entries. Okay. Find entries. So what they would do is they would go to the level. I like messing around with the 61% and the 78% zone. Okay. If I'm going to enter, if I'm trading to a zone, which you can do. Okay. So somebody looking at these zones are looking at maybe putting in put contracts and looking at maybe shorting the market based on price coming to these zones. All right. One thing you need to know is that since you know that these serve as support and resistance, you need price to close below these levels to help you with to see if a trend is going to reverse. All right. Here's why. Price came up here and then it got what? Pushed down. You were in profit. You said, hey, it hit 61%. I'm gonna put a put contract in. It gets down here, and then you make money. It depends on what your zone, your take profit price is, right? But what price broke through this area? So if you held on and didn't lock anything in, you just got knocked right back out the trade. All right. Price came up here. Then you said, well, Eric, you said once price closed below, it's a good indication that you can, the trend has changed. Yes, price did close right here. Let's make this a little clear. Price did close below this level, but then it what? Pushed back up. All right. Price came back down and closed again. And then now we see this big descent. So you got to understand risk management. All right. If you did enter this and for some reason you did not lock in profits and then it went back against you, it's okay. Take the L. No trading strategy is going to be 100%. Can't know anybody say it. All right. You took a small L, okay, get back in, do the same thing. Now you won. All right. If you took a small L, but then you took a massive win right here, who cares about this small L? All right. That's how you have to approach this. You're going to take losses. All right. But using these tools, you're going to be able to increase more winnings. All right. So now that we got our levels of where price possibly could come back to, we clearly see that price does come and visit us. It took a while. We're on a daily. This went from March 18th, 2018, all the way up to January 17th, 2020. Yes, we're on a daily chart, so it's going to look higher time frame is going to look crazy. You can do this on a lower time frame as well too, on a 1 hour. So, but we just happen to be on the daily. All right, so we see the levels that come back. We can have opportunities to either short it to the downside or put puts, or we could have rolled it. We could have took call options and we could have rolled it up to these zones, or we could have just bought outright and then said to ourselves, I'm going to take profit once it gets to $50.60, which is at 61%. You just sit back. You let it get there. All right. You got some indecision. You got a strong move here, and then you gotta push that, and somebody can say, man, I don't like that. Like I didn't like the fact that I got in at $36 and then I was up to $48, and then all of a sudden it came back down to 40. Yeah, but look what happened. It eventually went to your targets. So this is big time frame. So it looks different, and now you see the flow. So you see in a chart, it's not going to automatically just go in one direction because you want it to. We have we have peaks and valleys. All right. So we got our zones. Let's take this off. All right. Now let's do what? Let's find our extension. I'm gonna go over trend base fib extension. All right. Click on it. Go up from the top. Gonna bring it down to where support was. Click. Bring it back up. Click. All right. Then we're gonna take this. We're gonna take our triangle tool over here. Rectangle, and we'll just draw a box down here, and we'll change the color. Change the color of the box to green. It represents taking profit, money. All right. Also, go ahead and right-click the extension tool. Go down to settings. These are only things that should be checked. The 0.618 and the 0.72. You can do the color however you want. Okay. Don't worry about coordinates and visibility. Leave those the same. Change your style. Go down. Make sure everything's make sure if all this is clicked, unclick all that. This is the only thing that should be clicked. Make sure this is the same and hit OK. All right. So we got our extension. We got our targets down here. All right. We can take this off. Boom. All right. So what did y'all notice? What if I told you from this point, from this date in December, and once I get confirmation that it's starting to break, what if I told you that Morgan Stanley will go to $26.95? You will say, Eric, where would you get that number from? How do you know that? Because we just used the what? The extension tool. So we're going to do a bar replay. We're going to go back in time. Okay. And we're going to patiently wait. And we know that what? We're going to measure this move. We measure the moves, and then we will plot on the chart. 61% will put a red bar, and then at 78% we'll put a red bar right there. And we will put an alert on our phone to alert me when price reaches up here to the $50 range, and alert me again when it reaches to the 55, because now we can come to the chart and then we can start making decisions on whether or not we want to take the trade. Okay. Also, you can put an alert in and say, hey, alert me when price goes above $42.14. What does that represent? That represents that we have now started a reversal, and we've breached the 23%. That's a high probability. If we breach the 23%, we're also going to reach the 38%. So these are potential buying opportunities. All right. And we know that for every level that we breach, we know that we're going to eventually have a high probability of reaching one of these levels. So that is how you can take advantage of the long calls or buying outright. All right. So y'all clearly see on the screen, we got all our charts, our targets, zones of entries and exits or whatever. All right. And that's it. We good. Now let's hit the play button and let's watch it play out. All right. You already got an alert on your phone. You gotta get another alert. Look at that. Targets was hit. Okay. Targets hit. That's what the fibs can help you with. Once again, does it always play out like that? No. All right. So what do we have now in real time? We have what? A impulsive bearish move to the downside. So what can we do now? We can measure this. Take these off. Measure this. And take it from here all the way down. Okay. What do we have? We have what? It breached the 23%. That's a high probability that what? It's going to go to the next level. And what did it do? It went to the next level. But it breached this. If it breached that, it did what? It went to the 50%. Did it go to the 50%? Yes, it did. You can barely see it, but it did. See this wick? It wicked up. It got it. It went to 50%. All right. This is a key level. If we break this 50%, we're going where? 61%. All right. You clearly see the retracements levels. All right. Ideally, we want to see this price come on up here back to 50 something, and then what? Look for a descent. All right. What's the downside target? Remember, we measure this. Click once, drag it down, click twice, right? Drag it back up, click again. Boom. Okay. Here. Bam. Targets in this area. Alright. Take that off. Boom. Go back because I forgot to do it the first time. Here. Change the colors though. So we're just gonna leave this green for right now to save time. We know that these are areas where we want to see price coming back into, and we'll have alerts from our broker or our phone that price has reached and came back into these areas to look for opportunities to go to the downside. All right. Here's the beauty too. Look at this mini wave, this mini move. Look at this move right here. You can measure that. You can do a fib extension from here to here, and look where it fell, right where these targets are. That means that this right here suggests that it wants to go here. That's the science. That's the beauty of using this tool. All right, let's go back through the chart and let's look for a bullish opportunity that played out a while ago, and we just now seeing the effects of it. All right, let's look at this move from here to here. All right, we had a nice little uptrend, and we had a little hefty pullback. Let's do the extension. The retracement. All right, what did price do? It came back down to the what? 78%. We would have had this right here. We drew a line. We say price comes in this area, look for buying opportunities because we're bullish now. And if price comes into this area, look for buying opportunities or get alerts. All right, cool. Take it off. Okay. Then we what? Measure from here to here. Take your tool, drag it straight up to parallel with it. All right. Click again, drag it back down to the same level. Bam. Look right. What do you see? Targets was hit. That was based off of what? This bullish move. We had the retracements back to these zones, which is support and resistance, and then our targets was hit. Guys, keep this simple. Learn how to use the tool. Don't worry about all the mathematical equations with this. All right. Who cares if you don't win? All right. You're gonna win enough. So who cares about if you did take a L? That's what happens too many times. People jump from strategy to strategy because they keep blowing their accounts instead of just sticking with a strategy. Strategies do work. What doesn't work is you. You don't work. You need to fix yourself. All right. So keep that in mind. You clearly seen on this chart. You see it. This is not just picking some fictitious zones or levels and saying, well, hey, he going back in time. So in hindsight, it's 2020. Of course, it looks perfect. No, you see the zones. You see the rules. The rules is 61, 78%. Price comes back to that area. Look for opportunities to either trade to it or get in and go the opposite way. I prefer to trade to it because I know once you breach one of the zones, you have a higher probability of going there. Can it turn around? Absolutely. Before it can breach and never come back. Take your small L, move on, look for the next opportunity because a lot of them will go there and you will make your money. Let's look at oil. I want to look at let's look at the WTI one. We're going to look at crude oil, US oil. Back on the daily. All right. Look at this. Wait a minute. What do we have? A bearish move, but you also have a bearish move right here too, right? Let me show you something simple over here, but we got this bearish move. So measure. what did price do? See the 61%? It came back 61%. Tell me what it did? Would immediately on the chart put a zone right here. We know if price comes back into this area, we need to look either for shorting opportunities or potentially to trade to this area, to these zones. All right, I told you I prefer to trade to the zones. Once price breaches to 23%, I look for opportunity to go here or there. All right, simple. So this is how I would have made my money going up here. Some people would have waited for price to come in here and then shorted. All right, let's do the fib extension to the downside. Bam. Boom. What happened? Targets were hit. It smashed through the targets. Simple. Right? Now we're moving with speed now. I just showed you guys. What's going to be one of the rules? One of the rules is we know that we have a strong reversal once it starts to breach that 23%. That's what we want. It breached what? 23%. This is my rule. Oh, somebody else may teach you something else. But when it breaches 23%, that lets me know that this move right here has found exhaustion and that we're looking to retrace. And I have a high probability to look for a setup to get to ride here or enter here. All right. I like to ride here. Okay. Because I have a lot of rules that were met for this condition. I'm only going to measure this move if I got a 23% correction. I'm not going to measure this move if it gets rejected down here at this 23%. It's not breaking it. It's just consolidating right in here. And then what happens is you may form a bear flag or something and it go lower. I mean, it's just a lot of consolidation. It's not giving me anything. So I have two ways I could trade this. I could put an active order down here to where when price I can do a sell stop. So if the price breaches this area, then I can go down to this target, all right? But if price stay consolidating in, I'm not trading it until it breaks this area of support or it breaks this area of support, which is 23%. Remember, I told you, everything is just support and resistance. That's it, all right? So you got that, all right? You clearly see on here. Let's do a bar replay. All right, let's do the replay. Y'all already know, okay? We it breached. Let's ride here. Let's make some money. And then somebody else wanted to go down. Remember, I said I have an order right here that's going to activate and it's going to go down to here. We're making money. Okay. Look at that. Boom! I just made money. Boom. I'm out. I'm done. My next thing is I'm going to wait till it breaches that support down there. That'll be my next time making this. Okay. Yes, I probably can go down to a lower time frame and make money on all these moves because I could do extensions and retracements on a lower time frame. All right. Now we're all in the profit. We just smashed it. We smashed it. See how many pips this would be if we were trading these pips. You know what I'm saying? I would have made 1,015 pips. I would have had a standard lot size right here. I would have made $10,000. Come on, guys. Don't make this so difficult. Keep practicing and doing this over and 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 over again. Stop trying to jump from strategy to strategy to strategy. All right. Once you start learning multiple strategies, what you can do is you can start incorporating them in. They all need to be incorporated into the same trading plan. All right. Yeah, you support and resistance is the staple. And then you can build from there. Even if you was doing a head and shoulders pattern, you know that it's still based on support and resistance. All right. Look like we have an inverse head and shoulders pattern right here. What's the rule? You measure from the neck down to the head, put it on top, you have your targets, boom. Then we're hit. All right, so we see oil, saw that one play out. Let's look at USD, JPY. All right, okay, what are we doing now? Let's see where we at. Here we go. Look at this move. Nice pull down, back. All right, let's measure it. Let's move. And it do take a little time for you guys to understand how the move works. Okay, you gotta remember the rules. We set our zones. We only concerned with 61% and the 78%. All right. Now, see, this is the reason why I don't like to enter at these, because you clearly had a lot of breaches that could have knocked you out your trade had you uh, had a sell order here. It would have retraced against you. I like to trade to it. See, you see how safer it looks to trade to it a little bit. You know what I'm saying? All right. So you had it right here. All right. Look at this move right here and right here. I just stretched it all the way over, but look at this right here too. Same thing, probably. Take it from the top, take it to the bottom. Let's stay right in this area. What did price do, guys? What did it do? It came to the what? 78 again. All right. Right here. Look at that. 61. It came to that area. All right. This thing wick down here. All right. Remember the rule. Let's see if the rules apply. When that thing breached that 23%. Oh yeah. So price come screaming down here, and then it come up. Boop, 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 boop. I get an alert. It what? It breached 106.927. Let's game time. What they say? Give me my money. Right here. Traded it there. If it breaches the 61%, then we what? Got a higher probability of going to 78. Boom. Take it there. How many pips? Bam. Here. All the way up to the 61. Look at that. 326 pip. That's $3,260 on a standard lot size. Give me my money. So there you go. All right. Now, what's our downside targets? We'll take what? This measurement from here down in here, drag it back up, and I will be damned. What do you see? Targets hit. Come on, guys. Don't make it difficult. Somebody can charge you $1,000. Somebody can charge you $3,000. All these crazy courses. I'm trying to make this simple. I'm making this for people like me and you, the way we think. Don't think about the skin color. I'm just talking about like our mentality. All right. Like, stop making this so difficult. People want to get these elaborate ways. They want to know. You get on these charts and you look at this video over and over, and you find it. You keep practicing. You keep messing up. So I want you to do, so you can get this. And then you start asking questions. Then you start saying, "Hey, look at this. I measured this," and I might say, "Well, look left a little bit. Well, what about this?" You know. So yeah. Now let's look at something that could be wrong. Let's look at this right here. All right, you see clearly the impulse up. Okay, well, let's do the fibs on it, and you still can use the same rules. But this is why I don't like to enter. I like to ride to them. because it's much safer. Here's the reason why. All right, so this move that we just measured, we can do extension on. All right, we're saying we went up here, came up here, bam, right there. All right, so basically what we're saying is, based on that move, we should be hitting up here at the 117 mark. Okay, all right, here we go. This is what I used to do as an amateur. I would draw up my retracements, and then I said to myself, I said, oh, look, it's coming back down. All right, got the 38%, 50%, 61, and 78. And I'm like, oh, it hit the golden ratio. I'm going long. What did that do? Look, see that wick down? It just told me up. I'm out. And then it comes back, and I said, oh, now it's about to go. It's about to go now. So I'm gonna enter back in. I'm up. Yeah, you could be making some money here. You could be making some money. All right. But it never came up here. It stayed within this range and then went lower. So this move became invalid for right now. Market does have a memory. Market does say, hey, I remember this, but we're not doing that right now. What we're going to do is we're going to finish this out, and then maybe later in the future we'll come back up here, and it's based on that. But for right now, it's invalid. This would have been considered a loss had you done the entry, but had you did the rules of what? All right. As soon as you're up, you got it, and then when it breaches to what? The 23%. All right. It breached it, but then I got caught again. I breached it. I said, hey, it's gonna go to the 38%. What did it do? It came back up here and retested. So I would have took an L, or I would have had profits. I would put my stop loss in profits, and I would have got hit. And then I was like, all right, I needed to breach this level now. So I'm showing you the real and the ugly. Price did breach this 23%. We say if it breached 23%, we do what? We look for entry because we know that it's gonna what? More than likely go to the 38%. All right, it breached it right here. See if we can stretch it out even more. See, it breached it, but then what? It pushed back up. Okay. Then what do we have? Another breach. You still do the entry. You enter again. You put your what? Stop loss in profit because it's clearly a profit. And then what did it do? It hit the what? 38%. If it breached the 38%, what's the next level? The 50. It breached the 50. What's the next level? The 61. If it breached 61, what's the next level? That. We're making money. All in here. Even though you might have took a minor L here, or you got a stop loss hit in profit, regardless, the rule is do it. Follow the rules. It don't matter. Every time you follow the rules don't mean that you're going to 100% be successful. But every time, if you follow the rules, you're going to have more success than not following the rules. That's it. When price breaks the 23%, that is an indicator that it wants to go and touch the other retracement zones. Can price fully turn around from there? Absolutely. Absolutely. That's what risk management is for. But once again, you have a high probability of it going to those other zones. Therefore, that's why I would like to trade to this. Okay, if you wanted to enter based on the retracements, okay, let's bring it back up. Sorry, bring it back up. If you want to enter, what you would have did? You would have did your zones like this. Okay, you're correct on this one because you think you're going long. Okay, if you enter right here, you got blown out because it kept going, and you also got blown out right here because it wicked down, which is okay. All right. Well, you got risk management is fine. When it come back up, you look for entry. ride it back. All right, but this is a bullish move over here, and then you're saying to yourself, hey, I'm gonna enter right here because I know it's gonna go here, but it never did. So it became invalid. So I gave you different alternatives. You could trade to it, or you could enter there. But I prefer to trade to the retracement zone instead of looking for entry to get in. All right. You say, well, Eric, when would you get in? Even if it did start to go up here, I would have did this. If it breaks this, then I get in. You're like, man, but you leaving money off the table. Who cares? From here to there, 265 pips. Come on, man. Stop being greedy. A standard, that's $2,650. Yes. From here, that's 948 pips. Okay. You could have made, but pick your poison. You don't have to, I don't have to be greedy on everything, all right? So I hope that helped. This is a Fibonacci extension. I know this video may be a little longer than what I expected, but we did Morgan Stanley, we did oil, and we did US JPY. I said I would do Tezos. Hurry up and do it. I'm not gonna spend a lot of time. As you can see down here, this thing is so new. I gotta stretch the chart out even on a daily because it don't have enough data. And I spoken to you guys too about how there was some form of manipulation on Tezos because of this spike up that you see. This also is an indication that someone is prepping Tezos to be over $14 a coin. Also over $100 a coin. All right, so we had a move up, spike up, and we got rejected. All right, price did come back to the 23%, so somebody could have shorted it down to maybe the 78, which would have been here. They would have had profit selling this. All right, pip count's a little different on here, so you see over here that so this is crypto, so the pips don't equal the same. So it seemed like it was more. All right, so that's the bullish. All right, you can measure this spike up to get an upside target. Take it down from the bottom of this base up here to the top. Break it down. Tezos between $10 and $13 is the price point where it looked like it eventually wants to go. All right. Okay, so now we can measure. See this move down? That's a what? Impulsive bearish move down. Whereas what I told y'all, what was that rule? Once we get the move down, okay, it break the 23%. Look what it did. All right, now look, this is a good one. It broke the 23 and it's supposed to go up, and then what? The thing spiked down, so it knocked a whole bunch of traders off. So when it pierced right here, you were up, you're ranging, you would have put your stop loss either at break even or you would have been in profit. So even if it did spike down, you're good to go. All right. As soon as price would have came back above this, you would have rolled it to what? Your 78 and your 61%. 61% right there. And here we go. Bam. Price pushed down, broke the 23. Let's look to get long. We got knocked out, but price came back up. And when it's back above this 23 again, we enter to go long, and our targets were hit. We're out. I told you I prefer to trade going. Now, some people are saying that, hey, this this thing gonna go down, and it possibly could, but it need to it need to have the rules, right? Look at this. Look at this move. It's a bearish move, pull it down, but here's the problem. This move was already met. That's what the spike was. The thing is that we didn't get a full retracement before the spike occurred. So this happened fast. We had a bullish flag, and then boom. Okay. So this would have been one time would have took a loss, but remember what the other rule is? You set a what? A sell stop right here below here, so you can bracket, meaning that it once it hits here, it'll automatically trigger and take you what? To the exit point. Okay, you would have had a stop loss right here. I mean, not a stop loss, but a sell stop right here. Meaning that if price comes down and breaches this area, it'll automatically activate. And you got your target right here, you're done. So there's two ways you can do this. Once you have a defined the bearish and the resistance and a retraceal, a reversal. So what happens is when a reversal happens, you look for it to breach your 23%. Then you can look to ride it to the next levels. But you can also put a sell stop order or a buy stop order if it's above, about 10, 15 pips away from where it reversed at. In the event, if it breaks those support and resistance levels, your order get activated and can take you up. All right. So we're just being very smart in how we are trading. And the better we get, the more profitable we get, the more we can help our families out, the more we can change our financial future. But with all things, I'm big on investing in crypto and stacking up. I believe this was outperformed any aggressive day trading or whatever you want to call it. All right. We need to be building our positions, guys. All right. So I hope that video helped. Y'all have a great day. Practice, 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 practice.